What's up, guys? Letting a few of you jump on here. Hopefully my audio is all right. I guess I'll just go through kind of what I've been looking at here today. Kind of an exciting day. This is the first time I've traded Bitcoin on the through what's called a CFD, which is kind of a derivatives contract. But you can, a lot of these firms, you can trade what's called CFDs through a forex broker, or futures broker. You can trade gold, oil, bond markets via the same instruments. But today was the first day that I've done that with Bitcoin on this account. So I think some of you that are in the room, you were kind of following along. I'm starting to fade the euro versus the pound up here again. I did it this morning, pretty much sold the high. We're coming back up to those same levels up here. So I've just been kind of fading back into that. But on this BTC, actually just at lunch here, I flipped and went short. It's been kind of difficult to get a position on. Hey, what's up, Logan? Morning. It's been kind of difficult for me to get filled. This spread's really wide. I don't know if you guys can see this. So down here, I mean, it's 78.93 by 79.58. There's like $70 of spread between these two, between the bid and offer. So you definitely don't want to be hitting the market and lifting the market here. You want to be trying to bid and offer, so you don't get a stupid fill. And there's always the downside to that is you can't get out. Like you can't just get out as fast as you want at a good level. But if you do get lifted, like I sold up here at 80, I don't know, like 80.69, I think. And then immediately, if I went on the bid, I'm already like $50 in the money just by putting my bid in on the bid side. So if you add liquidity to the market by bidding and offering, sometimes it's actually beneficial. It just kind of depends on how you get. Just a different style of trading. You don't want to be just trading at the market when there's that wide of a spread. So then right after this collapse here, I tried to, the market dropped here. Basically with the 15-minute cycle, we rolled over and we had this sell-off, and then I tried to sell right here and I just missed getting lifted. I was trying to sell another piece right there. I just didn't get filled. But I think we might have another drop down here on BTC to finish the day. I'm going to try to cover like 7,600 probably on this day trade short. Let's see what else is going on. So the market's pretty. Hey, what's up, Stan? The market's pretty the storytelling today is all around Facebook again and these trade war stuff. So the market was all bearish about trade war this, trade war that last week, and now it's just negotiation talk, everything's fine, and then the market rips right back. So anyway, I've been trying to say, like, I thought Apple was a buy down here. I covered my puts on Friday. I sold some puts at 170 that I got assigned to, so I'm actually long from around 170 right now. I'll probably buy back some puts if we get back towards 174, 175. Hey, what's up, Stafford? What are you guys trading? Are you guys short in here? I gotta switch my screen. Are you guys trading BTC? I've been playing the euro a little bit long today on these dips. And then I've been shorting euro versus the pound. Move that over. So Logan, you're short BTC 76 at 7,600. Oh, you're short. You want to cover at 7,600. What's up, crypto? Got you. Your Stafford's buying Ether. I like those Cardano and Neo ads longer term. In FX, I sold. What did I sell? I sold into here this morning on the way up on a scale, and then the covered. Probably could have went long down there too. Yeah, guys, on BTC, I definitely think 7,600 is definitely in the cards. Probably going to test 7,300. But, you know, we just had another bounce to a lower high, fortunately. Here, I might change up the audio for you guys to be able to hear it easier. I don't know if this helps. The question about position size. You in the River? You want me to look? Let's see. Is that in the crypto team room? Oh, here you go. I got you now. You're on my Zoom chat. I had a question about position sizing. If I'm trading at 10,000 Forex account, I take the 10,000 divided by 50 and get $200 per trade. Now, does that mean when I'm nibbling, say euro pound, I take 200 and divide it into smaller blocks, or use the 200 as my nibble? Stan, I'm not really quite sure. When while you're dividing by 50, I kind of look at it a little bit easier. Let me try to show you this way. So well, let me go back to my other screen. I'll show you. So on FX, I tend to think in terms of 1/10. I never liked that color. Hold on. So like 1/10 of my max. So on a $10,000 Forex account, like your max position size is probably maybe 500,000, I want to say, depending on how many pairs you're trading and what pair you're trading. I mean, you can get away with a little bit more margin on like the euro versus the pound than you can, I think, on Dragon, for example. Have you gotten to a point on your Forex where you've bumped up into your max buying power? I would think it's between, if you tried to put on like a $500,000 position, that's probably close to your max position size. So when I say light, I tend to think in terms of 1/10 of my max position size. As far as like a light position. So if you only had 50,000 on a particular trade, that's a pretty small position for you. And then if you're thinking in terms of lots, you actually kind of want to think in terms of 1/100th. So for example, if you wanted to fade the euro versus the pound here, maybe you start your trade with maybe you sell one lot here, another lot here, and you keep your position light, meaning you're only selling like 5,000 lots. So use 5,000 lot there, another 5,000 lot. And that's about right, because on like a $50,000 account, so 5 times the amount that you're trading with, usually a small lot would be something like 30,000. Because your max buying power is much greater. So that's about right. It's 5 times the account. 5 times of a small lot here would be about 25,000. So on that size of account, when you're doing a small lots, it would be like in the 5,000 range. When you wanted to get aggressive, you would take like a 50,000 lot position. So maybe it's like 5, 5. Maybe you get up to here, you do 10, and then the market starts to roll over, and then maybe you try to put on like 30, or you get a little 1 minute bounce and then you hit it with 50, and then cover those bigger pieces. Does that kind of make sense? Yeah, you're getting 100 to 1 leverage probably on a lot of these Forex accounts. So to put a 50,000 lot on, it's not like you're actually trading with 50,000 in cash. It's all levered up. But if you think in terms of, 1/100th of your max buying power, not in terms of your equity, that would be too tiny. You'd you'd be trading so small, it'd be silly. I think you probably have a good feel if you stick to like 2 to 5,000 lots. But see, the style of trading that I have is that, some guys, they only want to come in like maybe 1 or 2 entries. I mean, I might have 10 entries, 1, 2, 3. I might have 1 lot, 1 lot, 1 lot. So then I'm at 3. And then by the time I get higher in the range, I might sell a 5 lot or a 10 lot, another 10 lot. So I might have 5 entries before the cycle even turns, and then I might have even more entries on the 1 minute. But I just found that it's just easier to get your timing right when you have more than 1 entry. Just looking at cable. Yeah, on BTC, it just looks like we're going to trend here into at least these lows. We just keep getting lower highs. I mean, every rally is just met with another lower high. Hey, Ian, thanks, man. Appreciate that. Yeah, you're welcome. I'll keep doing it. But so guys, as we start trading Bitcoin more closely, I may have some solutions for you guys of some brokers to use, maybe if you want to start trading Forex more, or you want to start trading some of these CFDs. And it looks like these brokers are now comfortable enough, they're going to start bringing on Bitcoin. And I think I found one firm that They might have, it might be only for professionals, like a minimum of 500,000. But I found a couple of brokers are they're even putting on altcoins, which would be nice. Eventually when we get our Rhythm platform built, all that stuff's going to be in one-stop shop solution. But until then, one of the reasons why I flipped and went short this morning was just simply because this 15-minute cycle rolled over. It started to roll right here. So the near-term downtrend was in place basically once we broke right here. And you can see by the direction of the bands, everything's bearish, right? So you had some nice short sell opportunities up here if you were trading. And then the cycle crossed again here. It actually crossed again here also. So I want to actually cover this small short I have right now on the next move lower, probably this next drop down if we get it. I mean, this 15-minute cycle is pretty low right now. Let's see where the 30 minutes at. The 30-minute cycle just crossed also. I mean, it's not exactly high, but it's back down at least. I haven't done any ARB lately. I mean, the opportunities still exist though. If you guys are using Coinigy, you can always come to this apps button here. I haven't used any of these others. Probably should, but this ARB matrix is pretty cool. I mean, if you can buy well on Gemini, this is just BTC. But I mean, you can buy 7,900. At least the offer side here is 82.36 in this Canadian exchange. Sometimes you get the Eximo exchange will be pretty good. Let's see. Do I have trouble setting up accounts? Or do you mean for like customers? I actually have more trouble setting up US based accounts. I mean, I can have some solutions for some of you guys that want to trade Forex and these CFDs, BTC. If you're European clients, I have some solutions for that. I can't technically, I can't manage accounts for US customers unless I'm set up as a CTA, which we're gonna do that here in April. It's a 10 to 16 week process. Be a commodity trading advisor. But we think we're going to need that, as the CFTC is probably going to regulate crypto trading. You know, SEC is probably going to deal with the ICO market. But to do managed accounts for US customers, you got to be set up as a CTA. All right, Stafford. Did you guys add any Cardano this morning? We might get another shot at like 13, 14 cents there. I think dollar yen's finally catching a bid too. Oh, what's up, Sky Touch? Okay, well, don't forget. I mean, you've got the cycle, but then you have the actual price action, the actual trend. So if we look at Bitcoin versus the GDAX, so 7,300 here is definitely the next support. But you know, the cycle is low. So if we test 7,300 with the cycle being where it's at, I mean, you definitely want to be a buyer down there. But there's no reason why the cycle couldn't go halfway back up. Price doesn't go anywhere. And then you take out those lows and you go right back to the 5870 level. But I mean, I'm definitely going to be a buyer down here. Yeah, I mean, the cycle's low. The RSI is getting pretty low again. Daily. I don't really like the daily cycle crossing. This daily cycle makes me think we're going to retest. Actually, we're going to plug through pi here potentially. Or at least kind of makes me think that we're not going to get a low until later this week. Maybe even next week. We'll see. It's all relative. You got to kind of watch the price and the cycles. It's not, you know, there's no magic, no magical one factor. I don't use the 3-day, but yeah, it's low. The cycle that's really playing out is this monthly cycle. And this is our third month. And this thing, you know, this monthly cycle is still clearly wanting to play out here. The weekly's already pretty low. CME contracts expire for March. I think the front month though is further out. What's up, Jordan? Yeah, guys, Ethereum. I've actually been meaning to do this. I wanted to look at the relative value trades here. Uh, I didn't look at that this morning, but Ethereum's I think was looking like the cheapest last week, and that's the first one I've been buying. Like I haven't bought any Bitcoin yet. Big picture. But this level is pretty big here, 450. This whole area on Ethereum. I don't know why all these old signals got squished at the bottom of the chart. I mean, we had signals going back here months ago. I don't know. So we're back to big levels again. This intraday low here last Sunday was 450. That's the low that nasty intraday move we had back in December. We're all over those lows again. So I think you want to be a buyer though until it breaks. I've kind of been waiting for 450 here today. We failed at the 8 on the hourly. We might have one more push down here. It's probably the bigger guys are probably all waiting for that same level. $450, $460. Hey Joe, that's probably one of the leading candidates for the right catalyst for sure. I'll just tell you guys. I mean, I was talking to a couple of our advisors for our Rhythm ICO, and they were down at the Polycon conference in the Bahamas. And so, like these 90 subpoenas that went out, they went out to advisors also. It didn't just go out to 90 firms. But the SEC, they went after a good amount of people. I mean, you look at the Overstock guys, they got slammed with one. Some of these ICOs, they might have to give back all their investor money. Polymath, I mean, so it's kind of a mess right now. All the big money is kind of, the SEC is going to use this process to figure out what the hell is going on in the market, how they want to start to regulate it. But I mean, I think that's the right catalyst, Joe. I just don't know if it might take 90 days for some of that to really clear up. It's hard to know. The catalyst could just be price itself also. If we do double bottom and then we started to actually make some higher highs, there's probably a good amount of capital that'll start to chase. It'll kind of create this big sucking sound.
We do got to be careful though about the 6,000 level. If we can't hold 57, 58.70 on a weekly basis, oh man, then we might see this monthly cycle play out down to like 2,500. So we definitely would have to play defense in that scenario. I'm not saying we'll get that, but that's definitely where the risk is. I don't have the bands on the monthly till all the way down at 3,300 now. There's kind of an old breakout here at 3,100. See how we broke out here and then had to pull back and retested, and then there's a BCI right there. If we don't hold 6, that's the next big picture level is down at 3,000. That'd be nasty. That'd be really nasty. You guys want to hear about rhythm? Oh, you did? You checked out Marty? Oh, you can get lost in his stuff for years. I literally read pretty much everything he's ever written over 3 years of reading stuff every day. I'd be on the desk and it'd be slow, like around lunch, and I would just read, because you can go back and get back his papers that he was writing from the jail cell. That stuff's amazing. Yeah, he's fantastic. Rhythm. Man, we're gonna try to do so many things with rhythm, but the goal with rhythm was just to put together a professional trading platform that's kind of a one-stop shop. I guess you could kind of compare it to Coinigy, but Coinigy is just a charting service and data provider, and I mean I do like them. They've obviously helped do a great service to the crypto community. But when I think about financial services, I mean, you want to be able to make calls, get the market right. Even, I worked at Schwab. They never give that service to their clients. They're not telling them where to buy and sell. They just try to offer them the basic diversification, offer them different funds. They do good customer service, but they don't know how to trade. I mean, they would never. Most of these firms are just brokers. So I wanted to take more of a buy side approach where you actually have a real directional method. And then, so with inside Rhythm, we can have our trading platform has charts, has a news feed, has the chat room. We can offer real-time alerts on the mobile. You can swipe yes or no, I want to participate. And then, I mean, our vision from the beginning was always that this whole idea that the blockchain's decentralized, and then you're still having to go move your funds into an exchange to trade and then move them off and then back and forth. but between atomic swaps and even what you can do with like 0x and on the Ethereum blockchain with smart contracts, all that stuff should be able to happen away from the third party custodian model. So that's one of our products is called Bring Your Own Wallet. And so if we get down to something we like on Ethereum, like we do down here at 450, 460, we can issue our buy alert right inside the Rhythm platform, and we can set up beforehand like, hey, we want Rhythm to trade up to like 10 contracts or 10 ether. And so we can swap in and out and then send the trade right back to your own wallet, which is huge for hacking security reasons. It just simplifies the whole process. But that's the future. You know, the blockchain is going to be able to get rid of so much of the clearing and the custodial risks. Because don't forget, guys, there's big custodial risk inside of these clearing firms. I mean, the counterparty risk is big. I've talked about that before. I mean, there was times where I was trading bonds and I wouldn't trade with Jefferies or I wouldn't trade with MF Global, you know, right when they were having their issues with Corstein or whatever. You couldn't, you know, those guys get shut down. You can't buy or sell bonds with those third parties because the risk is that they don't have the money or they don't have the bonds to deliver, and then you're out the trade. So even though you agree on the trade over the phone doesn't mean that they're actually going to deliver the bonds 3 days later. So all that stuff can be, the blockchain solves all that, where we only execute if the smart contract knows that you have the money, and then the trade only actually exists if those, you know, certain scenarios are true. So we're going to be doing that with Rhythm. The mining solutions is a big part. So like I just had a call at noon with one of our better mining relationships, and I'm going to have some news on that stuff here also. Because guys, there's a better way. I know so many of you are interested in mining, but the choice is you either can buy your own ASIC and like, what are you going to do? You know, put it on your kitchen table. So the independent mining doesn't make sense really anymore. You know, the cloud services, Genesis Mining or Hashflare, and those are okay solutions, but we think we can do better, where you know, if you're interested in our mining stuff, you can buy our rigs, we house them, and then you own all your own coin, and we do all that for you, all the maintenance and everything. But we're going to get it to where you have better numbers than Genesis Mining and some of those other third-party guys. But these miners, they're so busy building out and ordering it's a big pain just to order ASIC miners. It's not the easiest thing in the world. So the bigger mining shops, they're obviously busy mining, so they need help on the trading side. So part of the Rhythm platform is where you can sync up to our trading platform, and we can help you manage your coin also. What's up, Joe? Yeah, you're welcome. You know, if Elliott Wave is all right. I've just found over the years that it's not really the end all be all. So Elliott Wave will kind of get you close to where maybe the market's going to turn, but you don't really need an Elliott Wave to tell you that the market's is pretty long in the tooth. I mean, anytime you start making 4 or more lower lows, you're getting pretty lengthy in your downtrend. I've just over the years has just found other things that make it a little bit easier to, if you know, to trade a bottom or to really define where the market's turning. Like the Elliott wave will give you an idea of where the market might want to trade to. It kind of can give you an area. But it doesn't really help you like decide when to really get aggressive. Like for me on Ethereum here, every bounce has been to lower highs. So until we get above pi, until you were to take out this pivot at 600, you're not going to really get any intermediate term momentum back the other way. And the Elliott wave just doesn't really help you with that. You know, if you did the Elliott wave up here closer to 1,000, it might project another, you know, like a C wave or the start of an A leg down. It might project out forward for you, and it gives you an area, but I don't know what you really do with that area either. I mean, I don't like to do like target trading. It kind of ignores the cycle. It ignores how price gets there. Like if I have an Elliott wave target here, but at this point in time, the market's up here, and I get a one-way move like this, I mean, you got to be covering if you were short into this type of drop. Just because where the cycle is, just because how far and the angle and distance it creates. You know, like how price gets to a certain area matters. So if it's a steep decline like that, steep drop, you got to be taking profit there, even though you haven't reached your target. You can use it. I just found there's simpler things that are more helpful than getting too involved on exact points on the chart that the market should trade to. Plus, try to be a little bit careful about the scenario building. You guys know what I mean by the scenario building? Oh, you're looking at Neo? Yeah, target trading is just tough. You're just gonna miss. You're gonna miss so many times. I mean, it's helpful when if you piece in and piece out is better. You can leave some for a particular area and let it ride. I mean, that's important to do. Did you guys, what did you say, Neo weekly? There was a lot of excitement up here around 180, 190. Yeah, look at this weekly cycle. I mean, this weekly cycle is almost done. But you're basically right on the bands there. The dailies rolled over again. We don't really have a pie line. So I guess if you break 50, I mean, we're coming back on some major areas, right? So if we don't hold 50, then there's no reason to think we can't go back to 30. All these markets can get cut in half again if we take out this low. The thing with Neo though is it already broke its February low, right? So this was the big low on the majors on BTC and Ethereum. Well, we already broke that. You close below it once, intraday move below it, and then we did kind of regain a little bit of traction back above there. But you haven't seen me buying anything else here on Neo at all. I cut some risk when we went through here, this area. But yeah, if we can't hold on to here, then we're probably going to get cut in half again to like into the 30s. What's up, lady boy? OMG? Look at OMG. So Mise Go kind of trades similar to Neo. I guess it hasn't broken its February lows, so you do have that to kind of hold on to. I mean, that's clearly where the risk is, for sure. I mean, those are big levels. I mean, this is Mise Go's only trading at $9. So if you don't hold the February lows, which were 720, this low from November is 550, 557. Yeah, that's going to get nasty. You really don't want this to break 8.25. The daily cycle is rolling over. It's kind of the same as the rest of the market. So you can kind of work a scale here, but you're probably going to test these lows. So if you wanted to add because the cycle's low and you could time it up with your scale that you can get heavier into the lows, that's fine. But there's just, I mean, when we keep making lower lows, there's just not a whole lot of rush to add to some of this stuff. I mean, the pivots, the big picture pivot is clearly 12.5. I would start my scale here and then just get heavier at 9 and then heavier into the lows. And then your risk is below 8. Yeah, this is definitely your big picture pivot. These daily cycles don't look very good. It's kind of a bad way to start the week. Any reason why you look over? Only reason why you look over only on USD pairs? Hey, Jordan. Yeah, so it's a BTC is going to outperform the dollar in the long run. I mean, it depends on what your time frame is, and what your definition of long run is. If you look at the US dollar, I think we've increased the money supply, the M2 money supply, since 1950 by something like 4,000%. No. So yeah, so you're losing a lot of your purchasing power every 10 years. It's a crazy amount. So the dollar doesn't hold its value really at all long term. But when we price things in money, it's extremely useful, right? It doesn't have an 80% collapse inside of 2 weeks. But dollars are still what we're pricing everything in. So I've talked about this a lot of times, but Bitcoin is not, yeah, I mean, yes, it has properties of a currency and it has store of value properties, but really it's still on the asset side of the equation. So you've got money over here, and then on the other side of the equation is assets. So when you want to understand markets, right, if assets are rising, the purchasing power of your dollar or your money is going down. And the opposite is true. When you have assets collapsing, the purchasing power of your money goes up. So if you were in cash, if you were in dollars in 2008, pretty much everything was collapsing. Real estate, stocks, bonds were kind of a lot of back and forth. Gold even went down in 2008. So as everything's collapsing, you wish you had dollars because the real value of your purchasing power of those dollars is going up. And now you can buy a lot more assets. So they're always on the opposite side of the equation. And the same thing with gold. When gold was fixed to, when we were on the gold standard, gold was on this side of the equation. So gold, the value of gold fell when assets rose. And when assets declined, the value of gold rose. But when Nixon took us off that, gold went back to the asset side. And so when we have assets rising, gold will rise also. Gold can rise just as gold can go down as the value of the dollar goes up. So it's important to know that Bitcoin and all these cryptos, we're still trading them as assets. You know, we're pricing them in dollars. So it doesn't really make sense to get a true picture of what like a Misego is doing versus BTC, because if I divide by the price of BTC, well, if BTC is collapsing or it's rallying, it distorts my picture of what a Misego is doing relative to dollars. Because the Misego might be just going sideways, but BTC has gone up a lot, so it makes it look like my Misego is worth less. But that's not what we're really trying to do. If I'm holding a Misego, I want it to be worth more dollars in the future. I mean, yeah, you can compare the two, where you might say, well, I really want to be in, I'd rather be in Bitcoin here than a Misego based on the chart, and that's fine. But if I really want to see where the dollars are flowing into a token, I'd rather chart it versus Tether versus the dollar, because then that's more accurate reflection of what that actual asset's doing. You know, the end goal is everybody wants to sell their BTC for more dollars, basically. I mean, and then that might change one day where we price things in Bitcoin, but we're not pricing things in Bitcoin, we're pricing them in dollars or euros. All right, Jordan. Yeah, it's important because you understand that when you trade FX, because your currency risk really matters a lot. I'm going to cover some euros here, guys. You know, if you were to make a loan, if you were to loan out Bitcoin, you're going to care about Bitcoin price, because wherever you made that loan versus BTC, that, you know, that's kind of like the FX risk, that if you issue a lot of debt in dollars and then the dollar rallies, you got a big problem, especially if you're a European country or an emerging market and you're issuing debt in dollars and then dollars rally, I don't know if you guys know that if you ever look at emerging markets, if the dollar goes on a big rally, emerging market stocks get absolutely crushed. For two reasons. One, because commodities tend to be linked to the dollar. So the dollar goes up, commodity prices come off. So a lot of the emerging markets economies are a commodity-based economy. But also the emerging markets have taken out like $9 trillion of debt they've issued in dollars. So if the dollar rallies, when they go to pay back those bonds, they have to convert to dollars. And that's basically what bankrupted Greece, was that the euro doubled. They had to convert all their debt to euros. Well, then the euro basically doubled, and that bankrupted the country. That's what set off their whole debt crisis. It was the rally in FX. It didn't have anything to do with them like not paying taxes or whatever garbage that CNBC was putting on every day about how the Greeks were lazy. It's like that was all the FX move. I'm just coming out of some of this euro versus the pound. I want to see if this 1 minute can roll over. I'll have another nice little trade. I'm kind of waiting to see if it'll roll to get more aggressive. Gonna buy some euro back. And I'll buy more euro on this next dip here. So I kind of fade this move on the short side. And then I'm playing the euro long. So if euro pound rolls over, most likely that's the euro coming off. So then I'm getting more long euros as that dips. And then covering the short side of euro versus the pound. And just kind of rinsing and repeating. I'm trying to sell some of this. I'm just trying to trade in small here today, trying to get a feel for these CFDs, but I am still offering some Bitcoin up here. See if we get lifted on this next bounce. I'm short from up at this level. Marianne, it's it's affected by BTC. Not necessarily. I mean, there's people that are buying and selling out of these coins in Tether too. You want to price it versus dollars if you can. Because the chart of pick your coin, if you have a big move in BTC, that chart is going to look like that coin is collapsing, but it has nothing to do with that. It's just the fact that it's simple math. You know, if I'm long Cardano at 20 cents, and I'm pricing it in BTC, and BTC doubles, it's going to make it look like my Cardano has been falling in value, but it hasn't. Maybe it's just gone sideways, or maybe it's gone actually up versus dollars. But BTC has had such an outperforming run that it makes it look like. I mean, if all you were doing is, if all you cared about was altcoins and BTC, then you should price everything in BTC. But last I checked, like when I want to pay my taxes, the government cares about how many dollars I have. When I want to go to the bank, they care about how many dollars I have. So you can't ignore the dollar price. That's the money side of the equation. I mean, I like when you want to take profits in something and you get these big moves versus BTC. I mean, yeah, for sure. If you get a big move up here, take profits on Cardano, and then maybe you go to Bitcoin if Bitcoin looks good. But usually, if the market's rallying like this in Cardano, Bitcoin's always is rallied a lot. So I wouldn't want to be selling my Cardano and then parking it in Bitcoin just to see my Bitcoin come back off 30%. I'd rather go to dollars, I'd rather go to cash, and then buy my Bitcoin back when the Bitcoin chart says it's in the right spot. Have you guys been trading salt? We've had some pretty good moves there. Pretty good sell. We had a nice sell signal for those of you that are in the room. I'm definitely going to buy more aggressively again if we get another drop to 2. I missed the last time because I was traveling. I was on my mobile, but we want to be a buyer 220 zone again. I'm kind of waiting for the same thing on Cardano. One more dip. But speaking of the room, guys, just come join us in our chat room if you're new. It's free to come in. We have a paid room for everybody that's on the crypto team. It's only $100 a month, but it's some of the best trade signals from the model, from our trading model, that you're going to find anywhere for that price. So there's a couple dozens, half a dozen trades a day that we're putting in there. Whether we're shorting futures, there's all different types of time frames to play. I mean, we're day trade short BTC. We have a short hedge on the intermediate term on BTC. Then we have our longer term positions we've been talking about that will slowly add into maybe 7,300 or closer to 6,000. So you got to have a multi-durational model, and that's what we work on. But I mean, we're also talking tech and all kinds of stuff. So I'd encourage you guys to sign up there if you haven't already. And then I do some training on our model. So my 10 years of trading treasuries is here in our trading course. All right. That's just a great value. I mean, that's 9 hours of video of me training on our model, analysis, risk, execution, some background of the model, some physics. It's all about cycles, the history of the business cycle. And then this is where we do our live training for those of you that want some group coaching. That's really where we get into working positions, and this is where the consistency comes. I mean, I've got some guys that are just absolutely crushing it now that, I mean, they're just on their own. I mean, they quit their jobs. They just trade full time. So that was always the goal when I started trading many years ago. Yeah. If you guys sign up for the course, yeah, you get the trading room signals for sure. I think we do it for an entire year. But yeah, so guys, I'll see you in that chat then. We'll watch BTC the rest of the day. I'll be in the morning with my live guys trading some Forex. Probably be trading more Bitcoin also now. All right, Stan, guys. All right, Jordan, Santiago. Catch up with you later. Guys, enjoy the rest of your trading day and your evening. Catch up with you a little later. All right, guys, be good. Later.